see it on your screen. This is before I took the trade. You can see this is the before and the after. Wow. Hello guys, welcome back to my channel. My name is King Joe of Wall Street, and this channel is dedicated to trading forex and showing you guys setups you can use to make incredible profits in the financial market. So in this video, I'm going to be showing you the two trades I took this week that were exactly sniper entries, and I'm also going to show you the before and after of the setup. One was on gold, which a lot of you guys are scared of, and the second one was on AUD USD, that's Australian dollar versus US dollar. So don't forget to like this video for more content like this so that I can get suggested to more people, and don't forget to subscribe to the channel. Also, if you don't watch this video to the end, you're not going to gain the interesting thing that I'm going to tell you in this video, to be honest with you. So watch to the end and hit the like button. Let's go. Hello guys, so this is my screen. Okay, let's get into work. So first of all, without wasting much of your time, the first setup was on Australian dollar versus the US dollar, which is it this? No, let me expand this. Okay, yeah, good, very good. So let's go to full screen. Let me show you the beauty of this entry. So first of all, this is a 15-minute time frame. I actually did this analysis on this time frame though. So let me zoom in so we can start our video. First of all, you all know on this channel that what I always look for before I take a trade is within a bearish environment, we look for a high and a low, and then price is going to ride up that high by taking out liquidity above this point, and then gives us a break of structure, and this is our structural liquidity. So this scenario for this trade is for bearish environments, and as you can see, AUD USD is going down. Good, I hope you understand the reason. So we are bearish. Now after that, I actually drew out this analysis when price was around this area, and I'm going to show you. You can see it on your screen. This is before I took the trade. So I patiently waited for price to come back into this zone and sell off from here, and this trade took a long time to play out because price was actually consolidating around this area just to manipulate people's psychology. That's what price did, and you can see after price took off from this point, it sold off to here, manipulated back here to take out people's stop losses, and then sell down to hit take profit. But trust me, I entered from above here, so all these manipulations couldn't affect me, and you can see that also on your screen when I took the trade. So let me draw my concept simple. We have in a bearish environment, lower low, a lower high, lower low, a lower high, a lower low, then a sweep of this high, and then a break of structure. Normally price might break structure, then give us structural liquidity, but sometimes price will give us structural liquidity before it breaks. And from here you can see our structural liquidity is this particular point here that you see that I took my entry from. So after that, price is now going to come back into this zone, take out this structural liquidity, right, go above it a little, then sell off and break the next structure. Your target is going to be the next break of structure. I hope you guys understand this. I don't want to spend time drawing charts up and down again for you guys, because I've done this a lot of times in my video, just trying to show you guys the authenticity of this strategy and how this strategy can help you reach your financial goals. But don't take this strategy just plainly as this like this. It will be good for you to go back to your charts and backtest this strategy like a madman until you know the ins and outs of this strategy, and you can spot it anytime on the chart, even by mistake. So with that being said, yeah, that's how I took this entry. So let me show you guys another pair that I took entry on. So ideally my take profit was supposed to be here, right, but I just got out of here due to impatience, because when I did the analysis, this was the low that I was targeting. But you see, price broke down. I sold off down to even 1:17, like down here. See, If I actually took my take profit around this point, this is 1 ratio 16.9 and even 17.6. So, but your ideal stop loss is going to be the next break. Take profit is going to be the next break of structure, and this is sweet 1 ratio 9.8 that enter. So, on to the next. The next is going to be gold. Gold was actually a buy we got, so the setup is going to be inverse. Okay, yeah, that's it. So, first of all, this setup I drew it, you see, Friday 18th of October, that was last week. And now this is a bullish environment, so the same thing that I drew the last time, but this time in a bullish scenario. A higher high, right, higher low, higher high, higher low, higher high, then a sweep of this higher low and break of structure immediately. After that, price will do whatever it's doing and rally into this zone, and then we buy from there. But price is supposed to give us a structural liquidity, a liquidity that is close to this place, so that we can take our entry from there. Or you can take your entry from this QMR, because we're going to have another block here that failed. Draw it out, which is what I did here, and the next time price came back to it, price bought aggressively. Now, a lot of you might think, okay, yeah, this actually has structural liquidity for this video, because as you can see, after this sweep, we have not seen any serious low until this one. Price also came here and tapped on this same low, because they know that a lot of people's entries and stop losses are going to be around this point. You see that? So price rallied above, and then someone sent me a DM. I was like, gold is falling crazily. I was like, really? And I saw gold was falling, but I remember my entry was somewhere here. You can see this, the before and the after, but I wasn't scared. But the next time price tapped into it on the exact spot, this reversed and hit take profit of 1 ratio 6.1. So that's how it's gonna be. And so this strategy sometimes doesn't work, so nothing is 100% in the market. Some people are going to say you only show take profit, you don't show stop losses. All right, now this is a simple scenario. This market was actually ranging, so I didn't know if we're in a complete buy model or a sell model. Okay. But what I did was that I analyzed this point to be going up, so we are buying, which is quite reasonable if you check on the time frame. So I got this as my low, my high, and then a sweep of this low and a break of structure. And I had this structural liquidity. You can see it's on top of my QMR. Very perfect setup. And then I even drew out my Fibonacci from the break of structure to the bottom of the sweep. I'm going to be covering this in my beginner to advanced trading course, so make sure you subscribe, so that when I'm giving you the exegesis of this concept, you're going to learn it completely. So ideally, my structural liquidity and QMR are supposed to be below this 0.5, especially structural liquidity, and you can see it's actually below 0.5, but this setup still failed. But at least you only trade what you're willing to risk, and this strategy is good because your stop loss are always going to be tight. So whatever it takes, I didn't still lose that much. And then yeah, that's all. But this is 1 ratio 6. Most of my trades are 1 ratio 6, sometimes 1 ratio 8. So if I hit one take profit, I have to lose 8 times in a row to lose that money, which I can't lose 8 times in a row, because this strategy has high winning rates, like 80% thereabout. So that's that about that. Thank you for watching this video. Make sure you like and subscribe. Let me summarize the video right now. Hello guys, so that's the simple anatomy behind my entry. So yeah, this entry can make you profitable if you backtest it like a madman and find out all the different ways this entry appears. Sometimes it appears on higher time frame, appears on lower time frames too, and I have more trades like that, but I'm going to be showing those ones in the course, like the course I'm going to be taking. So the advanced section, that's where we're going to touch this, but we're going to start from beginners to intermediate and to advanced. So if you don't have knowledge on trading forex, subscribe to this channel and comment I'm interested I need your course. Just tell me what you need in the comments so that I can start arranging them. I already have the blueprints of the course, everything I'm going to be taking, but I haven't received enough responses from you guys, so that's why I'm still reluctant to start at the moment, because if I start it, who is going to watch? So yeah, I think we've come to the end of this video. I don't want to make the video very long. Most of my videos sometimes used to be long, but I think this one, since we're not really teaching much, let's just make it a short video. So thank you for liking and subscribing. Also, a lot of people would like to see maybe I made $10,000 with this strategy, I make $100,000 before they click, but that's not the goal here. We're gonna get to that. The time is coming. I'm gonna make $10,000 in a day and post that, and I know by then we're gonna start getting a whole lot of views, because people like seeing money, like I made so amount of money and stuff like that. So we just keep it simple. Trading is risky, it's really risky. Make sure you only trade where you're willing to lose, and check out trading books like Trading the Zone by Mark Douglas, Trading the Zone, just so that your psychology can be fit, you can have discipline, and then stop chasing price, because that's gonna wound you badly. I got some wounds this week because I was trying to chase price, lack of discipline. So so for that reason, I just paused trading a bit and then went back to study so that my psychology can come back to balance. Yeah, we've come to the end of this video. Thank you for liking and subscribing. I remain King Jehu of Wall Street. Make sure you like, subscribe, follow me on all social media platforms. Yeah, thank you.